Today we're going to talk about putting together a watch list every day as a trader. For most new people that come into this, the first thing that they do, they look at the top percentage gainers on the day, and then they fail by only sticking to the top percentage gainers on the day. A stock gapping up day one, a lot of times you guys see me, I barely pay attention to it. When I simply scroll out on ticker symbol IINN, for example, you could see when we look left, I ain't really got nothing to work off of. That's what newer people fail to realize and understand. I want levels I can build off of and put together some type of plan. So when a stock is gapping up day one, like IINN here, I don't really want to touch it. I know it's going to be overcrowded. It's going to be a tug of war with the bulls and the bears. Until the stock proves to me that it can run effortlessly, then I'll focus and pay attention on it. And there's a lot of opportunity. Day one, day two, day three, day four, day five, there's a lot of opportunity. Most of the time, I find a lot of my trades, stocks that have been in play for a week, 2 weeks, even 3 weeks. The longer a stock's in play, for example, let's take a look at DWAC. Now, this is a more bigger priced stock as it's up here at 70 something dollars a share. But this is just to give you guys an example. I can scroll out and look left on this name and you could see we got price action. I got levels I can build off of and work. That's what I really look for, putting together a watch list every day for you guys. I want to focus on stocks that have been in play for multiple days. I want to pay attention to stocks that are setting up on bigger time frames. The bigger time frame you spot a setup, the bigger the move could potentially be. So for instance, let's say you pick up the daily chart and you notice that the moving averages are getting real tight together and it's forming some type of squeeze. It'll all fall down to that 1 minute time frame and you can get a really big squeeze on that stock. If you pull up a stock and the first thing you look at on the daily chart, the stock, is it above all of its moving averages or is it below all of its moving averages? If a stock is below all of its moving averages, that's weakness. I don't want to see that. I want stocks that are above all of its moving averages. That's bullish. Bullish sentiment, bullish power. And I know when other people look up at that daily chart, they're seeing the same thing I'm seeing. And this is the key importance of not cluttering your charts with indicators. It's just going to blind you from the truth. A popular indicator that a lot of people like to use, there's nothing wrong with it, but it's called RSI, Relative Strength Indicator or Index or something. And RSI, it tells you if a stock is oversold or overbought, and then they start to rely on that RSI. And what I try to do, and it's good practices, you guys, the further you advance in your career as a trader, always try to reflect and think back. Well, how would have I thought about this if I was brand new? What are new people thinking about? And putting it all together, they don't know what they're looking at. To be honest, they have no idea what to look at. They have no idea how to break down charts. So the more you do this, the better you get. Look at yourself and consider yourself like a professional athlete. Now, don't laugh at the subject, but professional athletes, football players, baseball players, basketball players, even if you're an Olympic athlete, it's all about your routine and your process, day in and day out. The same boring routine every single day. At first, as you get into the day trading world, showing up every day, you're putting together your watch list, showing up pre-market. When you're new, you have no experience to go off of. You have nothing to build off of. So when you start out, you're typically gonna be slow in putting together your watch list. You're only really gonna want to focus on maybe 2 or 3 stocks. You don't want to overwhelm yourself But then again, in the back of your mind, you have that feeling and that thought that you're missing out. You're missing out on the hot stock that all the professional traders are trading and talking about. Am I right? Pre-market, IINN. It's gapping up. This stock's gapping up pre-market from $2.30 up to a high of $3. All this volume starts to come in. It's got a fresh press release. It's Monday. That's another thing to determine. Always be aware of your surroundings, you guys. Let's break it down real quick. Today's Monday, January 31st. We're at the end of a month. It's the start of a new week. So rolling into Tuesday, it's still early in the week, but we're also rolling into a brand new month. Now, with that being said, Saturday, Sunday, stock markets are closed. Stock market are closed on those 2 days. Newer people, they have that thrill of trading. They get excited when trading. So they just sat on their hands for 2 days, Saturday, Sunday, putting together a watch list, a weekly watch list, reflecting back on the previous trading week, seeing all the big movers. So come Monday, they're super excited. They're eager to trade. Right when that bell rings, they have their finger on the button ready to click buy. I remember looking back when I was brand new and being overly excited right when I heard that bell. It's almost like a psychological trigger when you hear that bell. Ding, 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 ding. You feel like you go into panic mode and you feel like you're in desperation mode, that you have to catch and find the hot stock. Take advantage of it before it's too late. Am I right? I've been there. I've done it. But then over time, I've realized, hey man, I've lost majority of my money the first 10 to 15 minutes of the trading day. Why am I trading right out of the open? And a lot of times I've seen the easiest setups and easiest money plays an hour after that market open. So all of the degenerate, I look at them as degenerate gamblers, risk takers, thrill seekers who trade right out of that open. It's never a good idea. It's a tug of war, you guys, between the bears and the bulls. When a stock opens up, right when that market opens, the stock has no idea what direction it wants to go. It's going to fight, and then it's either going to rip up or it's going to rip down. I look at it as a 50-50 coin flip. We have no idea which direction a stock is going to go, even if it has a textbook setup, like a pattern, for example. We can easily draw out something here on IINN. Right before this market opens, you could see that the stock was in a range right here from just under 250 up to down to $3 a share right before the open. So IINN was setting up right here, and it was in a range just before the open from 3 to 350. Right when the market opens up, all that volume hits right out of the open. Any chart you pull up, you're going to see a huge wave of volume, a blast of volume. It's like if you're in the middle of a blizzard. If you guys ever remember the classic movie The Thing, remember every time they opened up the cabin door, the blizzard and the snow would blow in and the wind, and the captain would say, close the door. Just same thing applies here. Right when that market opens, somebody opens the door and everybody just comes flooding in. And that blast of cold air just comes pushing in. Stay away from it. It's a tug of war. This is all the degenerate gamblers, the risk takers, the thrill seekers. This is where they get chopped up. And sure, you guys, there is a time to trade when that market opens. There is. You've seen it too. There's market cycles, we call it. If you're noticing every day, right out of the open, stocks are just ripping to the upside. And you guys, if you've been around in the markets for over a year, you know what I'm talking about. If you're seeing every day stocks are ripping right out of the open, that's the time you should be witnessing and taking note of what's going on around you. And as I always tell you guys, best to always be observant of the environment, pick up on the theme that you keep seeing over and over again. And then over time, The more people start to realize a theme that keeps happening over and over, then that's when they start changing it up. The theme. Picking up on that theme, the earlier you pick it up, the longer you're able to capitalize on it. Stay on your toes though, because they could change it at any moment. A newer theme that we've witnessed and said we picked up on the first month of 2022, this current new year. We said we noticed newer IPOs have been perking up and taking off. Newer IPOs. Now, I can't go offhand and tell you guys how many IPOs we've seen pop up and run, but IPOs that have been open for a week, 2 weeks, relatively newer IPOs, we've been seeing them perk up and pop up a lot. Just for example, we have a fresh one, KSCP. This is a newer IPO. It's only been open for 3 days. It opened up here January 27th. Been open for 3 days, and it's ran from $6 up to a high of $27. So a $21 run in 1 day. Newer IPOs have been the theme recently. Now, as more and more people pick up on this theme, they'll change it up, and then some other theme will pop up. As I tell you guys all the time, the stock market, it's very, very, very trendy. Very trendy. Always being observant of what you're seeing going on, themes and patterns that you're recognizing, that is where you're going to make your money, you guys. We've seen all kinds of different themes and patterns pop up along the course of our career. For example, I've seen new IPOs day one perk up and be hot. I've seen low flow shipping container companies go crazy. Stocks like Dries, DCIX. If you guys remember any of those names, those were really popular back in like 2018. We've seen low float Chinese stocks pop up and be hot. We've seen stocks under $1 run up over that big $1 level, be hot. There's all kinds of different types of themes. NFT stocks, last year, what was it? Can't remember the ticker names, but we've seen a handful of NFT stock. TKAY or OSG, I can't remember. There's so many different themes that popped up, but you guys catch the drift of what I'm saying here. Yeah, TKAT and something else popped off. I can't remember. I think it was WKEY, if I'm not mistaken. Pick up on these themes that keep happening. When Bitcoin was popping off, or even till this day, anytime Bitcoin pops off, what are some stocks that pop off with Bitcoin? I can name 2 right off the top of my head. Riot and Mara. Every single time Bitcoin has a big move, you see Mara run in sympathy with it, and Riot, RIOT. Mara just got beat down from $84 to $24. Riot, you can see right at the top, Riot blockchain. This got beat down from $46 down to $14. Now let's pull up Bitcoin. I know there's a Bitcoin ETF, but I forgot the name of it. BITO. You look at Bitcoin over this stock got beat down from 65,000. It's all the way down here to 37,000. So as I say to you guys, if you're a very, very observant person and you can pick up on patterns and themes and you pay attention to the environment, you can make a lot of money. You can. That's all it is pattern recognition. And once you get that experience under your belt and you've witnessed a few of these themes that pop up, see how they play out, that's how you learn and you prepare for when these things happen again. As I said to you guys this morning, when stocks, we go through like a dry spell. We know earnings are put out 4 times a year. There's 4 quarters in a year. So all these big companies and all these companies put out earnings. Usually right around the time just before earnings starts up, low float stocks, small cap stocks, they dry up and all the attention goes to large cap stocks. But then over the course of when large caps are putting out their earnings, something crazy like KSCP, a low flow small cap stock, runs up and goes supernova. It's like somebody lights a firecracker and throws it into the small cap bin, and then you'll see all these small caps just pop off and explode and go crazy. It happens all the time. Does it happen all the time? Every single time? No. But you do see it happen a lot.